Okay, Accounting 6. Tonight, today, this morning, whenever you're watching this, I want to cover Chapter 23. Chapter 23, Chapter 23 is looks at financial statements and does a little bit of analytical work. If you've taken Accounting 1A, you've done this. I cover this in Chapter 13 in Accounting 151A also. So most of you have had an example, or at least had a stab at this before. You've seen it. So here's what I want to do. I have pulled some data in here because it'll save us a ton of time instead of you watching me type, which is never fun. I have an income statement here. You know, I've got the who, what, and when. I've got a comparative income statement, meaning that I'm showing revenue, expenses, net income for 2010 and for 2009. And I can sit and look at this and go, wow, I had $705,000 in sales in 2009, and it jumped way up. It jumped up to $895,000 in 2010. Does that mean I'm doing better? Am I doing worse? You know, you want to come down to the bottom and go, look, my net income went up from $137,000 to $207,000. Woohoo, I think I'm doing better. At least that's the reaction I would give to the whole thing. Excuse me. So, how do we do a little bit more analysis on this? And I want to focus on both horizontal and vertical, and you know how we do that in Excel. Vertical analysis is where we take every number on the income statement and we turn it into a percentage. And that percentage is a percent of net sales. So to do that, I'm going to take gross sales and divide by net sales. Okay? So if you can see, the outcome is gross sales is larger than net sales. It's 104%. Okay? So I've got my 101.4%. So my sales are 100% of net sales, which makes sense because you've got some returns and allowances, so your net sales are less than total sales. Okay? Cool thing about this is, let me just fix that real quick. There we go. Now, missing an underline. Okay, so the cool idea or concept here is I want to then take this and just copy that formula down, right? And we can grab it by the fill handle here and drag it down, and we all know that it's not going to work. We've been doing this long enough where we know that Excel is going to have a problem with this. And why? Because Excel is taking B12 and divided by B14, B13 divided by B15, and by B16, and so on. So we're dividing by 0 and we're creating a problem. How do we fix it? We can go in and manually change every one of these formulas, but that kind of sucks. So I'm going to come over and hit F4. F4 locks my reference so that it refers to B14 all the time. But since I'm going to want to copy these this formula down as well as over, I really want to lock my reference on the row 14 and not the column B. So notice I hit F4 again and it takes the $ out from in front of B. I can hit enter there and I can copy that down. And it'll work. And you can see that I've got B14 divided by B14, B13 divided by B14, and so on. I can then copy this down to all these cells, or I could grab it, copy it across all of them, and take out the ones that I don't want. Either way it works. Okay, so there's my first step at vertical analysis. I'm vertically analyzing the income statement by looking at everything as a percentage of net sales. And I want to emphasize that because I've had students in the past, choose something other than net sales. Typically they choose gross sales, and that's just wrong, so don't do it. Now that I've got this set up, I can take that whole column, copy it over, and I have now C12 divided by C14, 13 by 14, and so on. So I now have numbers for 2010 and 2009. We can go in here and fix some of our formatting if we must. I can hold down the Control key and hit multiple sections at once and kind of pretty this back up the way it was. I will admit that this was an assignment turned in by a student, and they had done a really good job, so I'm using it as an example. Okay? Good enough. Close enough for right now. So you can see that I've got 2010, everything converted as a percentage of net sales. 2009, everything is a percentage of net sales. So they're both 100%. Here's the benchmark. Net sales is 100%. My bottom line profit, net income after taxes, I made 23.5% net profit in 2010, and I only made 19.8 in 2009. So the implication there is that yes, the company is indeed doing better. Let's see if we can go figure out why. You can see where beginning inventory went up. As a percentage of sales, it actually went down. Purchases went down. My total cost of goods sold went down as a percentage of sales, even though it's a bigger number. So I'm doing better here in cost of goods sold. So I'm obviously selling things at a higher margin, or I'm, was able to buy some things at a lower price, which helped out tremendously. It leaves us more dollars, or a greater percentage, in gross profit. This is good. Salaries and wages, while they're up in total dollars here, they are down as a percentage of sales. Excellent. Other selling expenses are up as a percentage. That's not good. Officer salary is down as a percentage, and total G&A is down as a percentage. Net income before income taxes is up. My income tax expense is up, but overall I'm better off as a result. Okay, so that's the vertical analysis. We convert everything up and down based on net sales. Horizontal analysis is where we calculate the difference, 2010 minus 2009. So we're looking at this, and sales increased $189,550. Good. Okay. So I can look at this, and as in just sheer numbers, gross sales went up. But now I want to convert that to a percent. What percentage increase did I have over the prior year? Take my increase amount and divide by the prior year amount, the base year, and I get 26.9. That's phenomenal. I had a 26.9% increase in sales. Awesome. And I can copy this down too far, make a mess of it. But I don't need these. Take all of the blank lines out. There we go. I need some formatting help. I need to fix up, you can see the double outlines and things need to be cleaned up, but not worried about it for demonstration here. So on your horizontal analysis, we're comparing these two numbers to each other, showing the increase or decrease and the percentage change versus the base year. The base year is always the earlier year. Okay? So I have almost a 27% increase in gross sales, a 7% increase in returns and allowances, 27% increase in net sales. That's awesome. On a 27% increase in net sales, I only have a 17% increase in cost of goods sold. That means more dollars are going to gross profit and to the bottom line. If they were both the same, 27% and 27%, then I'd be breaking even. The fact that it's lower means I'm doing better. Okay? 10% increase in salaries, 69.7% increase in other. That's bad. These are good because they're less than, again, the 27% increase in sales. So anytime I'm doing a function like salaries and wages for less than the increase in sales, I should be coming out ahead of the game. Ahead of the game here, ahead of the game here, behind here, not as good. But overall, I'm ahead of the game. And I'm doing better net income before taxes. My tax rate's up, that's bad. And my profit is up. Okay, so that's how we can analyze, that's the horizontal analysis. And again, I could go through and put in all of my underlines and things if I wanted to do that. Don't know that I'm going to take the time right now. I think you guys understand. All right, the balance sheet. That's the income statement. Here's the balance sheet. And I want to do the same thing with a horizontal and a vertical analysis. Do I have to do one first or the other? No, not really. I could do the horizontal analysis first and take the 2010 amount and subtract the 2009 amount. So my cash balance went up $41,000 plus cash divided by the base year. 87% increase in cash. Woohoo! That's an awesome thing. For those of you who know how I feel about cash, that's a great thing. I'm just going to copy this down and skip. Control-C and Control-V can be a wonderful thing when you're in a hurry sometimes and you want to skip lines. Okay, I'm going to come over here and grab this real quick. Format Painter, dump it in there, take this whole column, turn them back to dollar amounts and take the decimal point out. There's all kinds of ways to format things. I'm just trying to think of the quick way to do it. So here we go. We have 87% more cash. We have 60% more accounts receivable, 130% more supplies. It's a small number. I'm not going to worry about it. Otherwise, that would be a lot. Inventory only jumped 3%. That's good. You're managing your cash. You're not. If your inventory is climbing dramatically, it's using up your cash. All your cash is tied up in inventory. Land didn't change. Building didn't change. Accumulated depreciation decreased. Well, it's a credit amount, so yeah, it would go down. I would expect that. Net book value went down. I would expect that. We didn't buy anything new. And all we've got is the depreciation on the existing assets. Accounts payable went down. Awesome. Sales tax payable down. Payroll taxes payable went up a minor amount. Income taxes payable went down. My total current liabilities went down 60%. Wow, this company looks like it's doing really well. My mortgage went down, my long-term liabilities in total, and my total liabilities are down. Notice common stock didn't change. We didn't issue any more stock. Paid in capital, we didn't issue any more stock. Retained earnings is up. This tells me that last year's net income, less dividends, actually drove more stockholders' equity in the company. So in total, my equity is up 55%. All good things, all very good things going on here. So after having done the horizontal analysis first, let's look at the vertical analysis. When we're doing the vertical analysis, the benchmark is different. It's not driven by net sales anymore. It's driven by the current item divided by total assets. Okay, so I've got cash divided by total assets. Cash is 24% of all my assets. And if I come over here and I put the $ in, lock my cell reference, I can copy it down and across. Cash was only 15.5% of my total assets last year. So you can sit here and again, like we did in the income statement, compare each of these items. And again, there is a percentage of total assets. I have seen it done where people take total current assets and use that as the divisor or the common factor. That could work too, as long as you're being consistent about it and you're not switching around and using one time and one another time. It gives you, the whole point is you're common sizing, and you've got to be consistent to do that. Notice I even applied to the current liabilities. I'm dividing those by total assets. So we're looking at everything, even equity, as a percentage of total assets. Okay? I am going to come over here and try and grab, I'm going to grab those two columns and use them to paint the formatting here, and then I'm going to modify this one just to make it work. There, got the lines in there all nice and neat. It was easier than what I did up above on the income statement. Okay, so notice your 100% line is total assets here. Your current liabilities are 7% this year. 7% of total assets, down from 21. That's phenomenal. Total liabilities are 17%, down from 36, I'll call it. So this company's doing really well. But that's the kind of analysis I want to see you do. And the only real trick here is that you've got to lock your reference when you're doing the vertical analysis, but you don't when you're doing the horizontal analysis. Good enough? All right, so since I said I had a student prepare this, I'm going to go show you. Okay, so I'm going to go show you the student's project. Here we go. Here's what the student threw together. And again, it's the same numbers, okay? And, you know, nice, neat formatting, cleaner than what I just showed you, both the horizontal and the vertical analysis, okay? Some notes over here. Not a lot. The ones in red are mine, but some comments on what's going on. Here's some good things, or some things to look at. In this case, it's like, what's driving this? What's driving my other selling expenses to go the wrong way in this particular case? Let me show you the really neat thing about this. Kind of brings together all of the other things we've learned in this class. If I click on D12, which is sales, D12 is a formula, and it's equals, I'm going to hit F2, equals round sales underline 10 divided by sales underline 10, comma 3. This student used named ranges and named each of the line items on here: cost of goods sold, sales, revenue, payroll taxes, and then included that in their formula, which is really kind of slick. and then he rounded it to 3 decimal places. Since we're dealing with percentage, that's 104 point, yeah, 101.4. So this is 1.014. So he's got 1 decimal place in a percentage. So watch up here in the formula bar. I'm going to kind of scroll down through these. The second one is returns for 2010 divided by net sales for 2010. Okay, if I go to one column to the right to column E, it's 2009. So notice he's got returns 2010 and net sales for 10 and returns for 09 and net sales for 09. And he's got all of these set up. He set up took probably a significant amount of time to build this, where it shows you payroll tax divided by net sales, selling expense divided by net sales, salary divided by net sales, and he rounded them all, cleaned up his calculations, total operating expenses, net income, all very slick. Okay? Same thing over in the horizontal analysis. Other selling expense minus other selling expense, 09 versus 010, calculated as percentages. Oops. Here he's just using a formula. He didn't name all the things in column F. That's fine. This was a lot of work. I think it's overkill. But it just shows you some of the things that you could do. Down below in the balance sheet, same thing. Named everything except for column F. All right, pretty cool. And then down below, this student went in, sorry about that jump, and dropped in current ratio, gave me the definition of it, acid test, inventory turn, return on sales, earnings per share, and so on. Gave me the definitions and calculated them for 06 and 07, and gave me some notes and descriptions on them. And again, the formulas down here are using you know, the named ranges that we set up above for the calculation, and rounding, and the whole thing. This is a great example of being an overachiever. So I want to say that because I'm not trying to prompt all of you to go to this level. But if you get there, this really demonstrates that you've learned the material that we've been covering in this class. So I'm really happy to see somebody go to this kind of an extreme. But this was obviously, you know, the grades at the top. This was 50 out of 50 points. Here it all is, all the points, and only one homework problem. So chapter 23 is a nice, easy, short homework assignment. Okay. That's pretty much it for now. Not a lot else to cover in chapter 23. Hope you're having a good time in class. And I hope you like my videos. Again, I really want to encourage you to give me constructive feedback on it. I'll take constructive feedback all day long, you know, because I want to make them better. I want to make it work for you so that you can use them over and over again to learn from, and that they're actually, hopefully, a little bit interesting and not boring as all you know what. Hopefully I'm not sounding like I'm sitting here calling Bueller. Okay, well, we'll skip that. But again, would welcome any constructive feedback on my videos, and hope you're enjoying class. Bring any questions, and I'll see you in class next time. Have a good day.